Traders, Gary Wagner here just before 12 noon in Honolulu, 6 o'clock in New York. It is Thursday, 3rd day of May, 2018, and this is the daily report for gold and silver. Nice upside rally in gold and silver, with gold gaining about $7.20, closing at $13.1280. Silver up about 7 cents at $16.45, and that is all within a marginally, fractionally lower U.S. dollar, down 0.054, 92.28. Unchanged Dow Jones Industrial Average, 23,930. Palladium, by the way, did close lower by about $3, but a nice, respectable move in Bitcoin futures, 97.05 and 96.90 in the CBOE and CME futures exchanges. Traders, gold prices are experiencing a modest rally today, currently trading up by about $7 at $13.1270. It has traded to a high of $13.19, above the high achieved yesterday. But most important is the fact that gold is able to hold on to the gains achieved during trading today going into the close. Therefore, my recommendation is to maintain our current long position in gold as well as our current stop. Traders, as you know, I utilize a technical approach in trading that combines multiple indicators, and I look for confluence or agreement between these different approaches, and when they all line up, I believe it greatly increases the probability of a correct forecast. Consider the variables we are currently looking at: the moving average intersecting with a key Fibonacci retracement level, that level being a 50% retracement of the long data set from 1238 to 1369. Add to that two other variables, Elliott wave as well as candlestick pattern identification. In the case of Elliott wave, we had the conclusion of a third wave down, as well as a candlestick pattern that is indicative of a bullish reversal. While yesterday's daily candle can be identified as an inverted hammer, what we can really see is a great variation off of a three-river morning star. Of course, on a three-river morning star, the first criteria is that you have a defined downtrend. That defined downtrend is kind of capped with a long red candle making a new low, and then from there, you get a very, very small-bodied candle which gaps below the red candle or at the red candle. Simply put, it is called a star. And then that, of course, is followed the next day with a large green candle, such as this. And then the three candlesticks together form the three-river morning star, and it is a pretty solid indicator of the potential of a reversal. In the case of what we saw over the last 3 days, we have the first criteria, that is a defined downtrend, followed by an extremely small bodied candle, which is in a star position, meaning it is below the body of the prior candle, and then it is concluded with the green candle that occurred today. These three candles together absolutely form a variation of a three-river morning star. Now, alone, this particular candle type can give us some information. However, combined with the other factors that we talked about, gives us a high probability that what we are looking at is in fact a bottom. Assuming that our assumption is correct and gold prices will rise from this point and move to higher ground, our exit strategy will be something that we develop over the next couple of days into next week. But initially, what I'm looking for is for gold to trade as high as the 50-day moving average, the short-term moving average drawn here in black. Traders, as far as silver goes, it is once again trading off of the lows of the defined range that silver has been trapped in. However, the caveat to upside moves is that it is still trading well below the short-term 50-day moving average, and the 200-day moving average remains above the 50-day moving average. It is for that reason long positions in silver need to have a cautious approach. And traders, lastly, look at Bitcoin futures gaining about $500 on the day today. What I find impressive about recent moves, and especially today, is the close is well above the level of resistance it had short term. It has now crossed above not only the 50-day moving average, but also the 23% retracement, and our target remains firm at $11,000 per coin. Traders, we took a little different approach to our show today in that we laid out the technical indicators that we look at to trigger various signals within the market and issue buy and sell signals. It is a combination of those indicators rather than any one by itself, I believe, that gives this technique such strength. Now, as you're well aware of, it doesn't always work, but when it does so brilliantly. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.